Hey, good afternoon. My name is Sean Metters. I'm with Paul Kitchen Associates here in Cape Girardeau, Missouri, and I'm here today with Dave Weston. He is a loan officer here in Cape Girardeau, and I'm just going to be going through some stuff with him. Dave, you want to introduce yourself?
You bet. Dave Weston, as Sean said, mortgage lender throughout all of Southeast Missouri, and I'm with Fairway Independent Mortgage Corporation.
Perfect. I am so excited to be able to talk to Dave. Dave has helped me through the purchase of my own home 2 times now, and then also a refinance. So Dave has been there for me, answering questions, lots of text messages, all the fun stuff. So Dave's always there to answer.
Well, you
my
made
questions.
it easy for me.
Well, I appreciate that. So today, what I want to talk to Dave about is just some of the processes, some of the questions that a lot of first-time home buyers have whenever they come to me and they say, "Hey, I need to buy a house, and what's the first step?" Typically, one of the first things I say is we need to get you in contact with a lender so we can find out what you can look for. So it's great to get out there and start looking for a house, but you really need to be pre-qualified first to make sure that you can actually afford to buy that house.
Nope, absolutely. You don't want to fall in love with something that you simply can't afford.
Yeah, that is a tough one, because once you're in love with that house, you find out you can't afford it, then all the rest of the houses don't look quite as pretty. So that's something that I like to get going first. So one of the people that I do give a recommendation to is Dave Weston. So whenever I say, hey, somebody is looking for that mortgage, say, hey, why don't you give Dave a call and see what he's got. Obviously, there's other people out there, but I do recommend that they give Dave a call. So what's some of the questions that they might ask, or you might ask, whenever that person comes in to try to get that process started?
Well, no, absolutely. You're certainly going to walk through a credit application. Things about who you are, demographic information, and then employment and residence history for the last couple of years. But in addition to that, you really want to kind of dial in, or at least I want to kind of dial in as far as what's important to you about the house itself, about the buying process. What are things that can somewhat cause hesitation or make you a little bit scared? What's your long-term financial goal? Because this is home buying should only be a piece of your long-term financial strategy anyway. So if there's a way that we can put you on a plan that your home can be paid off in 20 years and you can save money to the point that you can retire at around that same point in time, then ultimately that's a win-win situation. So
yeah, that's pretty good stuff. If you can retire early, that's always helpful.
It's all about having a conversation and really finding about what you, the consumer, ultimately wants done. So
yeah. So what if? Do they have to have perfect credit? So do I have to have an 850, or can I do something better than that?
No, as a matter of fact, if you switch those numbers around, you can go down to 580.
Wow.
And still qualify. Now, truth is, especially in today's market, you're not going to get the most perfect terms for a home loan, but you can certainly still qualify at that level. So.
And what if I don't have $20,000 to put down as a house?
Don't need it. As a matter of fact, the majority of first-time home buyers, which is what I primarily specialize in, but the majority of first-time home buyers only have like 4 to 5% for down payment anyway of their own monies, and those funds can come from yourself, from a gift, from a retirement account. Or additionally, there's also several grants and other programs that are out specific targeted to Missouri home buyers.
Very cool. So don't have to have perfect credit. Don't have to have $20,000 down for my down payment.
True.
So
True.
What else would be there that would be a barrier that would keep me from being able to get that house?
The credit and income is obviously the two biggest biggest facets. You jump those two hoops, and pretty much there's no obstacle that's going to stop you from purchasing a home.
Gotcha. So I hear this term debt to income ratio.
Mm-hmm.
What exactly does that mean?
There are two ratios that lenders are looking at. The first is what's called your front end ratio, which is simply your housing payment divided by your gross monthly income.
Okay.
So ideally, you want to be somewhere around 29-30% of that income. So if you have $1,000 per month as your income, then ideally somewhere your house payment is somewhere around $300 a month.
Wow, okay, that makes sense.
The other ratio, and I think that's the one that you're referring to, because that's one you're typically hearing of, is your total debt ratio, or your back end ratio, which is your house payment, your credit cards, your car payment, your student loans, all that stuff added together, divided by your gross monthly income. And that typically will go up to 45%. Now, that being said, every loan that gets originated, that gets made, is ran through what's called an automated underwriting system.
Okay.
And if that automated underwriting system, yeah, well, automated, but if it tells you that you are approved with a 50% debt ratio,
Okay.
then you can go up to that. Now, I don't advocate that half of every dollar that you make is spent on your house or spent on your bills collectively, but you can.
Now, backing up, did you say gross income or
Yes.
net income?
Nope,
Okay,
gross.
income. So that's a big deal because your net income is way less than your gross income. So keep that in mind. It is based on the gross income, not the net income.
That is correct.
So what about, there's something called PMI.
Mm-hmm.
So whenever I get my loan and I find out what it's going to be, and then there's this little number that says PMI. What is that?
There's two types of PMI. One is private mortgage insurance, which goes to conventional loans, and that is basically it's an insurance coverage that protects the lender. It is when you as a consumer don't have the capacity to put 20% down on the purchase, it's added to your monthly payment, and it's really to incent the mortgage company, the mortgage lender, to make you a loan with less than 20% down payment.
Gotcha.
Now, in a conventional loan, once you achieve or once you hit that 20% level, it does drop off. It does go away. Its counterpart on a government loan for FHA and USDA loans is called MIP, which is mortgage impairment premium. Operates the kind of the same way. The only difference is it does not go away. You'll have that as long as you have the loan.
So can I refinance to get that off of there?
You can.
All right, perfect. So that's something to keep in mind. Also, with interest rates where they are right now, maybe later on you might be looking at refinancing, just depending on how things go. If things start to go the right direction, is there a certain time that you have to have your loan before you can refinance?
No, not at all. Theoretically, if you buy a house today and rates just plummet next month, you certainly could. My rule of thumb has always been, and will continue to be, is if the difference in interest rate allows you to recoup your closing costs on the new loan within an 18-month time period, then it makes sense. Then rates are low enough
Gotcha.
to refinance.
So that's a good question now. So what about those closing costs?
Mm-hmm.
So how did those work?
Working.
Yeah, do they come from the company, the mortgage company? Is it title work? What is a closing cost?
Nope.
What does that mean?
That's absolutely. There's multiple things, but basically everything that goes into making a loan is going to get paid for. So the title company is going to get paid for doing their title search, their closing, their title insurance that they issue, all of their title services. Then you're going to have an appraisal 9 times out of 10 when you purchase a home, as well as various other potential inspections, a home inspection, a pest inspection, sewer inspection, a roof inspection, who knows. Whatever you choose will also be part of those closing costs. You also do have lender's costs in the sense of every lender is going to charge something for underwriting your loan, processing the loan, just doing the nuts and bolts of things. And then you're going to have your first year's homeowner's insurance. That's going to be collected as well. So it's basically everything and anything that's involved with making you a homeowner.
Gotcha. So whenever you're online and you're looking at these mortgage calculators,
Mm-hmm.
a lot of times they don't have your homeowner's insurance or your PMI or things like that incorporated into those. Is there some sort of a number or ballpark number that we can use to add to those things, or is that just wildly different everywhere?
It can be wildly different everywhere. I am working on a property now that's in Oak Ridge, whose tax base is $380 a year.
Oh wow!
You take that also in Cape County, but if you look that to, say inside Cape City limits, that's probably going to be $1,200, $1,500 a year.
$1,200 is usually about the minimum I see right now.
So I mean, it within Cape County, it can widely vary. So
Gotcha.
What I would suggest is, if you ever have a question about it, is contact first and foremost, certainly your real estate agent. Say, hey, I'm interested in this property, and most MLS listings will have
Yes.
the most recent tax year
Yeah, that's correct.
accessible.
And then we just divide that number by 12, and that's what you put on your month.
That's what it is.
And then as far as the insurance and things like that, we can always get you in contact with somebody to give you an insurance quote, so that you can find out how much that's going to be for your escrow on that. So.
No.
So Dave, is there anything else whenever you're sitting down with that first time home buyer that you kind of go over with them, or something that's just something that everybody needs to hear about?
Something everybody needs to hear about. Well, I don't necessarily know about that, but ultimately, taking a home loan is certainly an endeavor for the next 30 years, or at least until you refinance it. You want to make certain that the mortgage lender and your real estate agent partner that you're working with is going to be there from day one through 5 years down the road. So they want to you want to make certain that they are going to be there to protect you, to care for you, and make certain that when things go wrong 2 years down the road, and things will, because that's just life, that they're there to help carry you through or navigate you through those things. So that's one of the pluses, if you will, of working with me, is that you're not, once you're closed, you're not left alone. You'll be navigated with.
When I say he helped me with my home purchases, the first one was probably 12 years ago.
Yes.
So, and he's still in the industry. So he's still in Cape Girardeau. He's still in our area. I can still go find him. So that's 12 years ago. So that's pretty good stuff there.
Well, that it doesn't seem like 12 years, but
yeah. Yep, that was the first one over there on the other side of Cape.
Yeah.
So, well, Dave, how can they reach you if they'd like to get in contact with you?
The best way is my cell phone. That number is always on me, and it's always, or the cell phone's always on me. The number's always turned on, and that number is 573-587-3380.
And like I said, my name's Sean Metters. I'm with Paul Kitchen Associates. My cell phone is 573-979-4157. Our office phone number is 573-579-6891. Located here in Cape Girardeau, Missouri. Love the city. Love the stuff going on in this town. So, if you're looking for a real estate agent, if you're looking for a loan officer or a mortgage officer, please give us a call. If you have questions, stick them in the comment section below here. If you get anything out of this video, hit subscribe, share it, tell everybody about us. Appreciate it. Y'all have a good day.
All right, take care.